Hello traders. While retail traders are staring at candlesticks and drawing lines, institutions are reading something completely different: volume structure. And today I'm going to show you exactly how reading institutional positioning gave clear warnings days, sometimes weeks before the move happened. My name is Jesper and this is the Institutional Terminal. Let's decode what the smart money is actually doing. So here's the reality. Price lies, volume tells the truth. Institutions move billions of dollars. They can't hide that footprint, but you need the right tools to see it. The terminal framework uses three core institutional metrics that Wall Street desks use every single day. First, AVWAP positioning. This isn't your standard VWAP that resets daily. This is anchored from significant swing points, as you see here on the chart. Tracking institutional cost basis from the moment they started building positions. Think of it as the institutional P&L line. When prices trades above the VWAP, institutionals are profitable. When prices trades below, they are underwater. And that creates one-way price action. Second, the point of control distance. This is the red line here. And this is the level where the most volume traded during the entire swing. It's mathematical proof of where institutions have their largest positions. When price sits at POC, that's equilibrium. When price moves far from POC, something is broken. And that dislocation tells us whether we are seeing institutional accumulation or distribution. Third, the Confluence score in the dashboard here. This is where the terminal becomes surgical. We are measuring how many institutional factors align at any given moment. Volume spikes, liquidity sweeps, absorption events, POC proximity, value area positioning. The indicator scores each setup from 0 to 10. High confluence, that's institutional grade opportunity. Low confluence, stay out. So this isn't retail support and resistant guesswork. This is tracking where institutions are actually positioned mathematically with volume proof. Now, let me show you how this played out across three different market conditions over the last 24 hours. Here on the chart we have Bitcoin on the daily. It's brutal right now. We see in the dashboard, we see the structure is bearish. We are now 26.8% below the VWAP. That's where institutions had their largest positions. The POC is right now, and you see here at 87,851. That's where institutions had the largest positions. And then we have the Confluence score is now at 4. It's barely registering. And the swing type is bull. That's about to matter in a second. Okay, so let's read the structure. The purple line here, this is the anchored VWAP, tracking institutional position since November. Bitcoin rallied all the way up to 128 in October 25, trading well above the AVWAP the entire time. That's a clean bullish regime. Institutions are profitable, buyers are in control. But watch what happens here. We break below the AVWAP and we can't reclaim it. We try, but we are not successful. And you can also see we have a lot of liquidity sweeps. Here we have delta is negative and we have 1, 2, 3, 4 sell levels. Okay, watch what happened. When we are at all-time high, we are reaching the second deviation band. We see 2 liquidity sweeps. Price went down. Then we have some positive delta, but it gets rejected pretty fast. We are seeing some absorption candles, which means that there are more sellers in the market. Here we cross the AVWAP and we are unable to reclaim the AVWAP. And here we see liquidity sweep, and here we toss the AVWAP again and price going down. So this is just institutions distributing at the AVWAP and sold into it. Current price is 69, let's say 70. That's about 19% away from the POC and 25% below the AVWAP. Institutions, they aren't underwater by 5 or 10%. They are down 25%. What does that mean? They are not coming back right now. This isn't a dip to buy. This is structural breakdown. The terminal even projects these purple magnet zones, and which we have here. These are areas where price tends to gravitate based on the volume structure. So the lesson here, when institutions break below their cost basis by this magnitude, counter trend rallies are distribution opportunities, not reversals. The AVWAP deviation of 25-26% with bearish structure means smart money has left the building. That is what institutional abandonment looks like on this chart. Now let me show you exact opposite structure. This is where institutions are aggressively accumulating. This is silver and this is textbook institutional accumulation. We have on the 4-hour chart, the bias is bullish. We have the VWAP deviation of 3.8%. We have POC at 50, institutional build positions all the way down. And the Confluence score is 3. It's a decent setup, but it's not quite that strong. We are seeing a bull market, but caution, we had a long bull market now in silver, and not all things will just keep on going up, so be careful. Complete opposite of Bitcoin. Look at this purple AVWAP. It's climbing steadily, and price has stayed above all the time. It's sustained. It's a sustained bullish regime. Institutions are profitable and they are not selling. Now check the volume profile on the left side. See the massive concentrations of volume between 50 and all the way up to 70. We even have volume building in this area around 73 and 80. That's months of institutional accumulations. They weren't chasing, they were quietly building massive positions in this range while retail wasn't paying attention. Yeah, and here is the smoking gun. Every time we see a pullback in the market, we are seeing that absorption's happening. We see it here on the way up. We have a lot of liquidity sweeps, more buyers in the market than sellers. So concentration of buyers packed in these small groups really shows a support of the trend. What is absorption? It's high volume, minimal price movement on a pullback. That's institutions stepping in as buyers every single time price dips. They are defending the structure of the trend. And what happened then? We have here we have AVWAP, here we have the first deviation, and here we have the second deviation. And statistically, in any market, whenever you cross the second deviation, it's time to take profits. We see a liquidity sweep 1, twice, and 3 times. And as you see, the absorption starts to dry up here. That means that institutions, they are not willing to buy into this trend anymore. And we then see a very huge drawback down to the AVWAP and even on the IVT magnet zone. The purple magnet zone, it sits on 68 to 74, right above the massive POC accumulation area. If silver pulls back here, that's not a breakdown. That's the institutions getting another chance to add. The structure is still bullish, the regime is bullish, and the volume confirms institutional sponsorship. The terminal even marks prior week high at 92. That's a clean measured move target based on the accumulation range. So the lesson, this is what institution sponsorships look like. Same indicator is the same metrics, opposite structure from Bitcoin. Absorptions on dips, sweeps at lows. Price holding above the AVWAP, the POC, showing deep accumulation. So when institutions are positioned long with conviction, they defend this structure. Silver is getting defended at this price, and Bitcoin is getting abandoned. We've seen institutional abandonment in Bitcoin and institutional accumulation in silver. But what's about when there's no clear institutional edge? That's where the terminal risk filter becomes critical. Okay, so let's take a look at one more chart. This is the S&P 500 on the 4-hour chart. Right now we are looking at 6851. And check this out. Our dashboard is showing bullish bias with price trading around 0.8 above our anchored VWAP. But here's what's really catching my attention now is that we are getting a confluence score of 5. Now, in our system, anything above 3 is considered a strong signal, but a 5 means we are stacking multiple institutional factors. We have volume spikes, we are seeing elevated volume confirming interests, we are near the POC, price is hovering around our point of control, and we are trading with 70% volume acceptance zone. Recent liquidity sweeps, notice the X markers, those are stop hunts that got cleared. And we have absorption detected. Here are the absorption here, and we are seeing smart money is accumulating here. So price is riding the anchored VWAP beautifully. This purple line is our institutional baseline. As long as we are above it, the bias is bullish. We also have this golden pocket here. This is between the 0.618 and the 0.65 Fibonacci retracements. This is acting as a magnet for a price action. You can see how price keeps gravitating back to this area. On our volume profile, we can see massive accumulation in the blue zone around 6.8 to 6.850. This is where institutions build their positions during the recent dip. And our POC at 6.857 is basically saying this is the level, the price level where the most volume trading during our swing period. Think of this as the fair value zone. Okay, so here is the play with a confluence score of 5. If we get another dip back towards 6820, 6840 zone, we are seeing absorption. And we get a bullish signal like these green buy labels you see here. That would be a high probability long entry. Okay, so here is my game plan. When I see a setup like this, I would probably buy around 6820 to 6840. And I would divide my trade up in 3. If I buy at 6820, I would take my profit at the first deviation band. I would take 33% off and pay myself. I would then move my stop loss to break even. The target number 2 would be at the value area high around the 6,960 area. And the rest, I would just let it run, keeping the stop loss at the SD1 band all the way and see how far it will go. In that way, I have paid myself and I have secured my investment. So if you're using this indicator, it'll automatically plot these exit targets for you when the signals fire. So to wrap it up, the S&P, we are bullish above 6,820 and targeting the 6,920, the 7,010 range. The confluence score of 5, now it's 7 on my dashboard. It gives me confidence, but we need to see another dip into our entry zone first. Watch the absorption sweeps and our VWAP reaction. If all 3 align, that's your signal to get aggressive. Yeah, so interesting now that I was recording this video that we actually saw a pretty good setup with the S&P 500. But let's synthesize what we have learned. We have the same indicator, the same metrics, 3 completely different market conditions. The Bitcoin AVWAP deviation was minus 26. The POC was abandoned, absorption at highs, which equal distribution. We have a clear bearish regime. We need to treat counter trend rallies as sells. We have the silver AVWAP deviation at +6. We have the POC showing deep accumulation and absorption at lows, which means sponsorship. Clear bullish regime. Dips are buys. And then we have the S&P AVWAP deviation just above the POC and absorption at resistance. Confluence score at 5 and 7, and we are at a very good position to take a trade. So this is the power of the system. It's volume-based analysis. You're not predicting anything. You're not guessing. You are reading where institutions are positioned right now with mathematical proof from volume structure. The terminal doesn't tell you when it will happen. It tells you what is happening, and that is your edge. Here's what separates institutional grade analysis from retail guesswork. 1. You have a framework, AVWAP for regime, POC for institutional positioning, and Confluence for setup quality. 2. You have context. The dashboard gives you everything at a glance. Bias, VWAP, deviation, POC distance, Confluence score, swing ability. That's no guessing. 3. You have discipline. Low confluence, you don't trade. Counter regime setup, you don't trade. The indicator keeps you out of trouble. This is how institutional traders operate. They don't force trades. They wait for structure to align. And when it does, they execute with conviction. If you want this kind of institutional context every single day, where I break down exactly where volume is confirming or contradicting price action across major markets, I publish a daily terminal briefing on my Substack, and you will also get access to my indicator by subscribing. The link is in the description. And if this approach to reading markets makes sense to you, and if you're tired of drawing lines and hoping, subscribe to this channel. I publish regular breakdowns showing exactly how to read institutional positioning through volume structure. So thank you for watching, and I'll see you in the next briefing. Trade safe. Bye.